The next budget is going to happen earlier than expected, and now the countdown to the budget has started on what's going to come out in the budget. Will it be a big trigger or not? In the run-up to that, there's an important meeting lined up today. The Prime Minister will be having and the Finance Minister will be meeting Niti Aayog members and economists today. The theme of the meeting is the economic policy reform and the road ahead. What are the issues that are likely to be discussed? Agriculture, as well as other economic issues, will be discussed for the budget. What's happening with job creation and skill development, that will also be on the agenda. The Prime Minister is likely to take stock of the initiatives for digital economy and what is the progress on digital payments as well. 15 invitees are likely to make a presentation before the Prime Minister, and we've got big names attending this meeting. We have Vivek Deheja, he's economics professor at Carleton University. We've got Praveen Krishna, Govind Rao, who's a public finance expert, Neelkant Mishra, Sumit Bose, we've got Professor Sukhpal Singh, N.K. Singh, who's politician and economist, Surjit Phalla, Amitabh Kant, who's the CEO of Niti Aayog. We've got Vivek Debroy, Ramesh Chand, and V.K. Saraswat, other Niti Aayog members also attending. So this will be quite an important meeting, and let's see what comes out of those discussions. Now we have with us in the studio Mr. Rahul Garg, direct tax leader at PwC, who's joining us in our Delhi studios. Thank you so much, Mr. Garg, for joining us. Now, in the run-up to the budget, a lot of talk going around on what's going to happen to direct taxes. For indirect taxes, we already have the GST. Now, there are these murmurs that the Prime Minister spoke about, those who profit from financial transactions should make their fair contribution to nation building. So people are putting two and two together. Is it going to be long-term capital gains tax coming in on share transactions? Could there be an increase in short-term capital gains tax? What are your thoughts? Could something like this come about in the budget?
Yeah, so what could happen, nobody is for sure in know of it, but yes, the point made that the capital gain tax suffers a rate of tax which is lower, and there is a rationale for that, why it is lower, and particularly the long-term capital gain, because it suddenly gives you a gain over the accumulation over the period of time, and that's why historically the capital gain tax rates have been lower. So that economics doesn't change even today. But insofar as short-term are concerned, one needs to trade off that whether the short-term transactions are to be encouraged on the stock market or not. And if you want to create liquidity in the market, the short-term transactions are necessary. And therefore, even though the short-term capital gain tax rate is less than the ordinary income tax rate, that gives you a platform where you are incentivizing the liquidity in the market. So the trade-off is, do you need to continue with that or you want to increase the rate? That's the point number one. And the point number two is that in terms of administering the short-term capital gain, today we have the security transaction tax plus capital gain tax.
Yes.
Now both put together becomes the tax burden on the taxpayer. And security transaction tax is virtually automatically administered through the IT system. But the capital gain tax is something on which you need to make sure that the compliance level is high. And that is a challenge for administration to ensure that the compliance level is duly met. And therefore, to my mind, the flip could be that look at the transaction tax and calibrate it in a manner that there is reasonable collection of tax and do away with the capital gain tax altogether.
Yes, but then a higher STT is going to hit your liquidity, right? We've had a market expert saying that markets are not factoring this in and it will be a big negative. The sentiment is going to get hit if STT and automatic tax is going to go up.
So the point is that how do you calibrate it? Whether it would go up or go down would depend on how the calibration happens. So if you are able to calibrate it in a manner that it is no more burden than it is today, then market would recognize that. But if it is calibrated in a manner that it becomes a revenue collection measure, then it would have an adverse effect.
Okay. Now, taking a look at the kind of mutual fund inflows we've got this year, they've been huge. Month after month, no matter how much the markets have corrected, inflows are coming in. And many mutual fund managers have told us these are SIPs. They come in every month and they've been sticky. Now, if there is any tinkering in the time period that you have to hold an equity investment, mutual funds or straight equities, for you to not to track long-term capital gains tax, say from 1 year it goes to 3 years, does it impact flows? Do you think it will have a big impact?
So it may have some impact for the time being till such time people reconcile to the new regime of tax. But overall, if you look at it, both in terms of the capital gain on long term and capital gain on short term, as you rightly said in the beginning, the rate of tax is less than the ordinary income tax. And if that is the case, then people would evaluate before making the investment. Now the holding period is changed, and therefore does it still make sense, and what are the alternate investments, and in alternate investments what's the return and rate of tax on that. And I still think that it would qualify to be a better investment being in equity than in the other investments.
So they wouldn't mind paying that long-term gains tax if the tax adjusted returns are more attractive. You think they'll be more attractive than other assets?
Yeah, so long as your calibration of tax is such that the returns are attractive enough, then people would lean towards the stock market. And that's a policy decision whether we want the instruments to be completely neutral and the all gains should be taxed at the same level, or we want that if today you look at the economic indices, the stock market is one industry which is reasonably holding its head high. And if that be the case, should you continue to be in that situation or use a principle of taxing all income similarly and therefore cause a concern in the marketplace? So it's a policy decision. And to my mind, if one were to look at a reasonable mid path in this, you could have a recalibration of the rates, but still supporting the stock market.
Okay. What about what's happening with direct taxes? What are your expectations of the budget? The finance minister in his previous budget has already said that the government is committed and will come out with a roadmap for lower corporate income tax rates, and they will remove the exemptions. So what do you make of that? How much lower could it go? And really, with the corporates tend to benefit if exemptions are gone, because exemptions also give a big relief to many corporates, especially when growth is seeing quite a slowdown in the demonetization era.
So one thing that if you say growth is seen as slowing down, and therefore if one thinks that the corporates would not make profits, then the rate doesn't matter, right? So the corporate tax rate matters only when you have an economy which makes profit and everybody is having to pay taxes. So I hope that's the situation, and we are not in a situation where corporates would not make profits. And if you remember the change which was done already in the budget, the corporate tax rate from 30% was brought in a single stroke to 25% for all new manufacturing companies. Now that itself, to my mind, after declaration of the lowering of the corporate tax rate, one significant step taken already. Now for the other aspects which is not relating to the manufacturing new companies, what is the game plan to reduce the tax rate is something where a clear roadmap is not yet available. My expectation is that in the budget we would lay down a clear roadmap and maybe a percentage point or so reduction in the corporate tax rate generally, not for the 25% category because that's already there, generally should happen.
What about direct taxes for you and me, regular people? Because, some consumption hit has happened because of the cash crunch. You want to spend and you do not have that much liquidity. So there is a belief that the government would like to leave a little more money in the pockets of consumers to go out and spend so that growth comes back, factory capacities are increased. What could be done when it comes to personal income tax rates? What kind of tinkering are you expecting?
So first of all, a typical scenario and the question that happens every year, would the exemption limit go up? And there have been various views on this, but I strongly believe that the exemption limit is something where you get the taxpayer in the tax net, and therefore even when you want to leave more money with the taxpayer, don't tinker with the exemption limit, but give the incentive to the taxpayer in another manner.
Like?
So that you could say that the rate of the tax is lowered.
Okay.
You could say that my band is increased, the range of the band is increased. It's a broader band now for lower tax. But if you suddenly lower the limit significantly, a lot of taxpayers go out of tax net, and that's not a great idea. The other thing that you mentioned is that leaving money in the hands of the taxpayer. Today, whatever has happened, that has not taken away the money from the taxpayer.
They just don't have access to
So
it.
they just don't have access to it if you were to look at only the cash money as an access. Otherwise, you have full access to the money. And therefore, to my mind, the fact that the economic activity is seen as slowing down
It's temporary.
is temporary. Till such time our digital economy is actually permeates through the system and gets smooth. So there is a time lag in this, but I don't think it's a factor of not making the money available. It's factor of not being able to utilize that money because you don't have the channel of the digital economy which is permeating enough.
So can you give us some numbers? So you're not expecting a big move coming in the tax rates, or you're expecting much lower income tax rates? Give us a few numbers.
I would say a relatively lower tax rate for individuals. The band may increase by 50,000 rupees or so. The lower tax band may increase by by 50,000 rupees or so. The corporate tax rate, as planned earlier, should go down generally for the other corporates also, not only for the manufacturing companies, and maybe a percentage point or so reduction there, and a roadmap as to how we are going to reduce it year going forward. And as you said, that elimination or the exemptions being phased out, that trend would continue, and therefore we can see that the few corporates who were availing of the exemption or were planning to avail of the exemptions in future, they might see that yes, there is an effective corporate tax rate which is lower, but it's not as low as it would have been for the exemptions.
What about things like benefits on housing loan repayments? Because the government has stated clearly that housing for all is a goal for them, and for homes that don't cost too much, do you expect more SOPs coming in by way of repayments of interest rates?
So I think in terms of the housing loan, and particularly when you talk of the affordable housing, and how much should ideally an affordable house cost and how should it be funded, then today the interest reduction is reasonably good to support that. And given that, I don't see much change in the interest reduction for the housing loan. But in terms of the repayment of loan, should there be an additional incentive than it is today, it could be one way of incentivizing the taxpayer, as we discussed, other than increasing the slab rate.
All right. Thank you so much, Mr. Garg, for speaking with us at NDTV Profit.